Yo, what's on, guys? Welcome back to the channel. In today's video, I'm going to go through some of the trades that I took throughout the week. I didn't really trade that much this week just because of the crazy volatility the market has had, and just a lot higher risk trading during these conditions. You got to be sized down a lot less than what you typically are, because the candles, like a typical 5-minute candle this week was probably like anywhere from 50 to like 100 some points. So with that volatility, it's really hard to trade, and I was just sizing down this week with how I was taking trades. So we're gonna go through some of the trades that we took this week, why I took them, and how we read the market throughout the week. So to backtrack a little bit, like the beginning of the week, obviously we ended up just dumping quite a bit. So when we go to like earlier in the week, this is kind of what the charts looked like. I'm not exactly sure the days that this was on. This was what, Monday? So on Monday, obviously we ended up getting a massive gap down, and the market was still bearish at the time. You can see on the 30-minute, the 45 puts are crossed on the 30. That means we're bearish. The 10's above the 50. This is how we know the market has trend. And when we do have trend, you want to focus on playing trades in the direction of that trend. So the 10 SMA is the green line, 50 is the blue line, and since the 10 is above the 50, with the 50 being flat or curled up, it's curled up in this case, that means we're trading bearish. So I'm just running through how I read these charts if you're new to the channel, because it's very important to know what trend the market's currently in, and we use that by looking at the 30-minute time frame. And obviously there's a certain way to pick the contracts. I'm not going to go over it because I've been it's just kind of a waste of time, but it's very simple how to pick them. You just round in the nearest open, or the nearest fifth dollar of worst by open, add 5, subtract 5 for the puts, and you do that on Monday and Friday. So that's a little simplified version of pretty much how you get those contracts for a quick review. But this is what we looked like. So off of open, we ended up on this 5-minute chart. This looks so nice. I mean, we're pulling back to this 50 SMA on the 5-minute. On the 0-day chart, again, we use 0-day charts to gauge our entries, and this is where we get entries from. So since the 10's above the 50 on the 0-day chart, that means we're intraday we are bearish, and we're looking for short entries. So this 50 SMA after the cross is that entry that you want to take. I ended up grabbing some short right here, and it's not always going to hit the 50 exactly. That's something you got to know. It's not every single time I'm going to tap it to a T. So once we start getting near it, I usually scale into it, and then once it starts to start dropping, in this case, I'll average up into it. And I don't even know if I got to average up into this or not. I don't really remember, because this was earlier in the week. But this little bounce right here from 3 to 4 something on the contracts, I think it wicked up a little bit more, but that was over 100 points, I think, on NQ, and that's something that I took. And it was a quick 100 some points, and I'll take that any day of the week. So you're when the market's bearish, the trades that you want to be looking for, like most ideal trades, right here. Number one being a 0-day cross on puts, and since at 9:30 these were already crossed, that's obviously not a trade that's on the table. So the next thing we look for, if the puts are already crossed, you look for the 50 SMA dip to go short in this case, since these are puts. So we come down to the 50 here. This is our 50 SMA dip, and we grab short at this dip because we're expecting these puts here to bounce from the 50, since the market's in a bearish trend, and this is a key pivot on the intraday chart. So that's what that was the trade that I was looking for, since the puts are already crossed. So yeah, that was that. And then the next day, on the 8th, this was a 0-day cross on the call side. And the reason I took this trade, even though the market was bearish, was because there was a gap from where price was on the 30-minute. I'm not exactly sure if I have the chart here, but pretty much since if we could just go back to the normal 30-minute chart here. So let's just say price was all the way, let's say at like $6, or yeah, let's just say price was below the 10 SMA a little bit at like 6 to like 650 on the contract. So and the calls were crossing. So if the calls were crossing and we were at like 6 to 650, and the 50's all the way down here, that's a big gap between where price is and where the 50 is. Like the premiums are a little bit over $2 a contract, and then, or where the 50 is, and then the premiums actually at like 6 to 650. Hypothetically, I know the price is all the way up here, but just giving like an example of how I would take this type of trade. So the premium, let's just say, is at like 6 to 650 or 6 to 7, whatever it may be, and the calls are crossing. So that gives us like what, like almost $4 room on the premium to hit the 50. And if calls are crossing, that's a trade I would take. That's like one of the only times I go against the trend in the market, is when where price is versus where the 50 is on the 30-minute chart. If there's a big gap of where the price is from the 50, I will take a 0-day cross in the opposite direction of the trend, because we know there's quite a bit of room to drop until we hit that major support on puts in this case. So this was a trade I did take. It was pretty simple. All we did was wait for this cross to happen, and then we did chop a little bit in here. I didn't enter until I think either this candle or this candle right up in this area. I was kind of waiting for it to bounce first before I was taking this trade. That was just what I was looking for, because at the time the SMAs still were down here quite a bit, so it could have dropped a little bit more. I was just waiting for it to start to bounce, then I was going to add into it and have my stop in place from there. But 10 went above the 50, got it on this little dip down here on this candle or this candle. I forget which one it was, but this was like an instant nice rip that we got. It was like a bottom tick that we gave in the Discord, and that was a solid move. If you got in this with options, I mean 3.5 to, I think these ran to like 4, I think they went to new highs on these contracts. I don't have the screenshot, but I think it went to like 520 to 550. So we got a nice move out of it. So 10 crossing the 50, very simple trade. And again, like this massive candle off of the open, I'm not chasing that. That is something you never want to do, is chase like a candle that is all the way 100% from the 50 SMA. So the 50 SMA is at like 250, and price was all the way at $5. Like there's no chance I'm taking that cross. And if it runs without me, it runs without me, because I know the risk to reward isn't there. And I've mentioned this before on some previous crosses that happened, where I say, we did get the 0-day cross, but from where price wasn't where the 50 and the 10 were, the risk to reward wasn't there. And if it pulls back, you're gonna be down a ton of points, and I just don't like that. And this was that perfect example. If you guys remember from earlier in the week, I went over this and showed you guys some crosses that I didn't take because of where the price was and where the 50 was. If this did pull back, you would be screwed. And in this case, we pulled back, and you would have been absolutely underwater if you took that. So, that's why I like to wait for that pullback. And if we don't get it, we don't get it. You just have to, pick your good risk to reward trades. And if it's not there, it's not there. So that was the trade that we did take. And then, so this happened. This type of like trade happened twice throughout the week. So, on the Friday contracts, you use the higher time frames to gauge where we could possibly bounce from or reject from. So this happened twice throughout the week. I'll show you what happened. So on the 4-hour time frame, 4-hour, keep in mind, 4-hour and the daily are massive time frames when it comes to the 50 SMA. So if we're approaching the 50 SMA on the 4-hour or the daily, it is massive support or resistance, depending on if we're below it or under it. So in this case, we're above it, and when we pull back into it, this is a massive support area on put. So that would mean that that's a massive resistance spot on like SPY with wherever we're at. So we ended up pulling back into this 50, and at the time I think the 30-minute broke below the 50, so it's kind of like a weird spot we were in. But since we're at this 50 SMA here on the 4-hour, it was likely that we're gonna see a massive drop. And I think that was the day that we ended up, I can't really remember, but we ended up gapping up a bit, and just the move completely reversed, and we flipped red by like 500 points, I think. Could be wrong, because it happened twice throughout the week. I don't really remember which one it was, but we ended up pulling back in this 4-hour 50, and then I don't even know if I had the screenshot from it, but if you just pull up the chart from whatever day this was, what is this, Tuesday? I'm pretty sure we ended up having a massive reversal, and that was because of this 4-hour chart. And I didn't take like a trade strictly off of this, because if you're trading futures off of like a higher time frame like this, especially in this type of market, I mean, it's just way too volatile to take a trade off of the 4-hour with futures. So, if you want to take options, this is a beautiful trade you could have taken. Just go short at that 4-hour 50, and we got a massive reversal. So, yeah, that's kind of what happened on Tuesday and why we ended up reversing. I'm pretty sure the market flipped back bearish at some point. I think I have a screenshot coming up, but again, this was what on the put side right here, the market was still bearish, and I was just looking for this chart to recross on puts, but we never got it. You can see this 50 SMA here on the put side. It's a resistance spot on the 0-day chart, and in hindsight, yes, you could be like, oh, just go long at the 50, but that's not a trade you want to be taking, because we know the market's trending bearish. So what do we look for? We're just looking for this thing to cross, and we didn't get the cross, so there's no trade, and that was that. And we didn't end up getting that cross later in the day. But this was another crazy move that happened. Obviously, I didn't take this because there was news that came out during this time. That's why this cross looks so clean. But you can see the massive wick that happened. We ended up dipping all the way below it, below the 50, and like holding, and we ended up just ripping because of news. So This is just an example of a 0-day cross. Obviously, I didn't take it. If you did take it, I mean, you probably got lucky, because if that news came out and just tanked us, I mean, you would have been screwed, because the candles were so glitchy. I think that chart froze at like one point. I wasn't watching it, but that's what I heard. And we got a massive, I think like 1,000-point move from here. But, this is just an example of like what a cross looks like. 10 crossing the 50, 50's curling up. Not a trade that I took, but just something, just to give you an example of what a cross looks like. But, and then here on the 10th, we ended up getting another 0 DT cross on puts. 10 went above the 50, and then you have to wait for this 50 to start to curl. So it didn't start curling until like one of these candles up in here. That's when you would enter. You don't just enter once we get the cross, because this 50 is super ugly. You have to wait for it to start to curl up, and it curled up somewhere in this area. Not exactly sure the correct time, but you kind of see where it does that in this case, like right in this area. So you take your entry there, and then for me, for this type of trade, I would just trail the 10 SMA, because we're kind of far from where the 50 is. So if we lose the 10, just buy back at the 50, and then go from there. But your stop would be below the 10 in this case because of the volatility, and nice move out of it. Next up, this is where the market ended up flipping back bearish. So I have these two screenshots of where kind of I would assume the market's going to flip back bearish, and I would expect to move lower. So right here, 10 is up super hard. That 10 SMA is literally vertical going up, and then the 50 is also trending up. We're pretty much crossing right there, and at that point I'd be like, okay, we're 100% going to be dropping and getting a move lower. And that's what happened. We ended up getting, over the next like 36 or 35 minutes, we ended up getting a move lower, and you can see how that kind of played out. And when the 50 SMA is still like sloped up like this, even though we're below the 50, I would still favor the bears, because the market really isn't neutral at that point. It just means that the bears kind of lost, short-term trend, and you just wait for it to get back above for us to be back bearish. But since we were sitting at those higher time frame 50s again, I was still favoring this to drop lower. And then once we got that 30-minute cross, that pretty much confirmed the move lower, and we went lower. So yeah, that's how that would have played out. And then again, whatever day this was, Wednesday, again, this is like right after this chart. So we got this cross, got this move lower, and then it kind of reset and pulled back to this 50 SMA here. And I was bearish until this 50 got lost, until we broke below the 50. And you can see, I'm not exactly sure where I'm going with that last 30-minute chart, but that's just an example of a pullback that we got. Even though the market's going up, I'm still favoring the bears, because this 50 SMA is sloped up. This is a very key support on the put. So I would be expecting price to go lower until that 50 gets broken. So, and then this was the example of that 4-hour 50 and daily 50. I forget what day this was. Was this on Friday or Thursday? I don't know, but you could see on the 4-hour, we wicked off of that 4-hour once, off that 4-hour 50 once, then we came back down and wicked off of it again. And you can see same thing on the daily. Like I said, the 4-hour daily time frames on the 50 SMA, or for the 50 SMA, are super strong, and that's why we got those bounces off of them like twice throughout the week, and that's why we end up reversing twice, because of these higher time frame areas. But this is like the before right here, and then you could see the previous day it was the same thing. We wicked off of the daily, massive wick, and then we came down to it again, and literally the same thing happened. So we ended up wicking right back up and going lower. So you always got to check the higher time frames to see what we look like and what we could possibly expect. So that's why I always flip through every single time frame, just to see on the bigger picture of what the market could possibly do. So that's kind of how I read the market throughout the week and what we did. So ton of information. Probably, if you could be confused, drop a comment if you are. But that's pretty much how I read the charts throughout the week. Didn't trade too much, but was still able to squeeze out some points, something crazy. Hopefully this week coming up, though, is a better week with volatility wise, and we could squeeze out good amount of trades, and just get some good price action. If the volatility could just get down a little bit, that'd be great. Like on Friday was a great day. I like that amount of volatility that we had. It wasn't too low or wasn't too high. It was doable to take some trades in. So I'll go over the trades that we took on Friday tomorrow, and go over a game plan throughout the week for the week. So if you guys enjoyed, I'll drop a sub if you guys are new. If you guys want to learn, join the Discord down below. That's where we share all the trades. And the last 2 weeks, haven't shared as many trades, just because volatility is super high. I don't want to give you guys a super high risk trade if you're trading futures, or someone that may not be as experienced. And I don't want to force a trade when we're just slinging like 200 points in like 5 minutes. So once we get back to that normal volatility like on Friday, definitely we'll be dropping more trades. But last couple of weeks have been lower on the trade side because I don't want to force something in this type of market. And I'm just gonna give you guys the highest quality trades. And with how the market was, like I said, didn't want to give too many trades out because it was just higher risk trading in this environment. So yeah, if you guys want to learn, go to the Discord. That's all I got. I'm out. Peace.